Here's what most crypto investors are missing. Ethereum is sitting at one of the most critical junctures we've seen in months, and the next move could determine whether you're celebrating massive gains or watching your portfolio take a hit. Right now, ETH has climbed back above the 4,550 mark and is showing signs of life after its recent recovery. Think of this like a coiled spring. The tighter it gets compressed, the more explosive the eventual release becomes. And that's exactly what we're witnessing with Ethereum's current price action. Let me break this down in simple terms for those new to crypto trading. Ethereum has established what traders call a base around the 4,420 level. This is like a foundation that prevents the price from falling further. From this solid ground, ETH has been steadily climbing, similar to how Bitcoin has been behaving recently. The bulls, buyers, have successfully pushed Ethereum past several important barriers. We've seen it break through 4,500, then 4,520, and most recently, both 4,550 and 4,600. Here's where it gets interesting. ETH has now reclaimed more than half of its losses from when it dropped from 4,765 down to 4,416. In technical terms, it's conquered the 50% Fibonacci retracement level, which is often seen as a bullish signal. But here's where it gets controversial. While everyone's getting excited about this recovery, the bears, sellers, are putting up a fierce fight around the $4,640 level. This is where things could get really interesting, and frankly, where most retail investors make their biggest mistakes. Currently, Ethereum is bumping its head against what's called the 61.8% Fibonacci retracement level. For beginners, think of Fibonacci levels as invisible barriers that prices often respect. They're based on mathematical ratios found throughout nature and have proven remarkably effective in financial markets. The good news? ETH is comfortably trading above both the $4,550 level and something called the 100-hourly simple moving average. This moving average is like a trend line that shows the average price over the last 100 hours. When price stays above it, it usually indicates healthy momentum. Now, let's talk about what could happen next, and this is the part most people miss. If Ethereum manages to punch through the $4,640 resistance, think of this as breaking through a ceiling. The next target becomes $4,685. But that's just the beginning. The real fireworks could start if ETH clears the major resistance at $4,765. This was the previous high before the recent pullback. A decisive break above this level could trigger what traders call a momentum cascade, potentially sending Ethereum rocketing toward $4,840, then $4,880, and possibly even $4,920 in short order. Here's what makes this scenario so compelling. When a cryptocurrency breaks above a previous high after consolidating, it often attracts FOMO, fear of missing out, buying from investors who are sitting on the sidelines. This can create a self-reinforcing cycle of buying pressure. But, and this is crucial, what if Ethereum fails to break through $4,640? This is where the controversial part comes in, and where many analysts are divided. If the current resistance holds firm, we could see ETH retreat back toward $4,580 for initial support. The more concerning scenario would be a drop below $4,535, which could open the floodgates for a deeper correction toward $4,465, $4,420, or even $4,350. And this is the part that's generating heated debates in trading communities. Are we seeing a genuine breakout setup? Or are we being set up for a classic bull trap where prices rise just enough to lure in buyers before falling sharply? Let's examine what the technical indicators are telling us, and I'll explain these in plain English. The MACD, Moving Average Convergence Divergence, on the hourly chart is showing some concerning signs. While it's still in bullish territory, it's losing steam. Think of MACD like the engine of a car. It might still be running, but it's not revving as hard as it was before. The RSI, Relative Strength Index, on the other hand, is sitting above the neutral 50 level, which suggests buyers still have some control. The RSI is like a thermometer that measures whether an asset is overbought or oversold. Above 50 generally means the bulls are in charge. So here's the million-dollar question that's dividing the crypto community. Is this consolidation pattern, what some are calling a contracting triangle, setting us up for an explosive breakout to the upside? Or are we about to witness another painful rejection that sends ETH tumbling back down? The key levels to watch are crystal clear. Major support, 4,535. This is your safety net. Major resistance, 4,640. This is the make or break level. But here's my controversial take. I believe too many traders are focused on these obvious levels, which might actually make them less reliable. Sometimes the market moves in ways that catch the majority off guard. It's called the contrarian principle. What do you think? Are you betting on Ethereum breaking higher, or do you see this as a setup for disappointment? Have you noticed how often these obvious breakout patterns fail right when everyone expects them to succeed? Share your thoughts. Are you positioning for the breakout or preparing for the breakdown? The crypto community is split on this one, and I'd love to hear which camp you're in and why.